Coming up today, stocks continue to rally higher. China stocks get a bump up, gold and silver rip higher, Bitcoin pushing towards 70,000, along with nuclear stocks continuing to surge, big mystery bets on the election, and why the stock market continues to crash higher. It's been another great week, guys. Let's go. And welcome back to the channel, guys. It's your favourite perma bull Jared here, where we're focused on all the amazing opportunities out there in the market, and we worry more about the upside risk than the downside. We're concerned with not owning enough stock instead of the least amount as possible. We love to buy the dip, and we hope you do too. And so what happened to all that October seasonality we've been hearing about? Ever since the Fed cut rates 50 basis points, stock market's pretty much done a textbook move higher on the back of looser financial conditions out there. What about that sideways market? And are we still on the verge of a crash that I keep hearing about every day? And first off, I'm just having a bit of fun with the perma-bears out there, as I get trolled all the time for being too bullish and never wanting to get out of the market. So I'm just having a bit of lighthearted fun with these video titles and when you see me in the comments. So don't take it too serious, and hopefully I can educate some of the perma-bears on the errors of their ways and help them see the light. But either way, the bears are hurting, but eventually they'll be right and we'll get that big, bad, scary 30 to 50% correction after this bull market's finished going up over 1,000%. Plus, the perma-bears should be excited by this opportunity anyway. If they truly believe what they say, well then this is a great time to short stocks at these highs. Especially when we've got some of the biggest stocks out there like Netflix, ripping up 11% today on a really good earnings yesterday. And even though we're seeing a bit of weakness in healthcare stocks, like CVS Health, it was a big buy the dip on the hammer candle. We're starting to see a lot of action in some of these smaller biotechs. After we had that monster rip up on Tuesday, and Brightmind Biosciences took a simple drug up over 1,400%, continuing its march higher today, doubling again from yesterday's price, just like some other ones as well. Tivogen Bio Holdings, and another one, Amylyx Pharmaceutical, ripping up higher, and we're starting to see a bit more action in the smaller caps. Stock pick I gave out to my members a few months ago, Hims and Hers Health, which I'm in at an average of 1587, getting a lot of volume in lately, and I'm starting to see this and plenty of stocks out there, and not just small caps either. We've got Palantir continuing its march higher. AI boom is still in full swing, and even though we saw ASML get knocked down pretty hard on Tuesday, which spooked the sector for a little bit there midweek on the back of curve controls to China, appeared to have got a little bit of a bounce today, but still not quite to all-time highs for the big fella. Nvidia still trading up in this all-time high resistance box, $138 a share. We still have a lot of bullish seasonality coming into it. We may just get that breakout next week. As we ramp up into Q3 earnings season, we've got mega cap tech just around the corner. The big one, Tesla, reporting on Wednesday after close, really coiling up going into this earnings. Do normally have bullish seasonality at this time of year, and say the market is getting ready for a gap either way. It wouldn't surprise me if that's to the upside. As a long-term believer in Tesla, I added to my position this week as well. And if we do get that gap down, I'll just be buying more shares, as I think there's a lot of good things on deck for Tesla and in the future. Cybertruck, Robotaxi, Optimus Bot, full self-driving, battery storage. There's a lot happening. And just as I've been telling you guys the last couple of weeks, I had a feeling Bitcoin was about to break out. Its liquidity's gone vertical. A lot of bullish seasonality coming in, particularly the next 1, 2, 3 months. And in addition to global liquidity going vertical, the odds of a pro-crypto government coming in, government spending going off the charts. We just heard from BRICS making inroads into digital payments, getting some really healthy moves in the space, especially from some of the biggest crypto stocks like Coinbase. Again, strong volumes, pushing up off these lows this week, along with other favorites and really high beta stocks out there. MicroStrategy, which you could pretty much think of as a leveraged Bitcoin ETF. Huge amount of bullish seasonality coming in, even over the next 1, 2 weeks and next couple of months. Big volumes pushing up, and some of the smaller ones appear to be coming back as well. Mara Holdings and Right Platforms, with some similar price action here as well. These big fat accumulation green candles, and even the stock of the home of all meme traders, Reddit, breaking out to a brand new all-time high today. Market cap $13.4 billion. IPO'd earlier this year in March, pretty much consolidated all year. We appear to be moving higher here. Some others as well. Virgin Galactic, Rocket Lab on a tear, getting some really nice moves and momentum out there. And even though the dollar's been strong of late, gold is completely doing its own thing, breaking out again to a brand new all-time high. I'd say for a lot of the reasons Bitcoin is as well, not to mention geopolitics, and that's great for me and my stock picks members as well, as I'm long a couple of junior gold miners. Best performing sector today, up almost 5% on a clean breakout. And like I told you guys yesterday, I thought silver was on the verge of breaking out as well. Again, bullish seasonality really shaping up on the chart. These precious metals don't even care about the US dollar, just ripped up there today on volume. Just like the uranium trade is continuing to march higher today as well. As the masses are starting to come around to it, everybody's starting to talk about it now. There's NuScale Power. Still lots of volume coming into this stock today, along with other similar stock that actually manufactures micro reactors instead of small modular reactors like NuScale. Big volume coming in this week. Another monster rip today for Oklo. This is the nuclear startup that's backed by Sam Altman. Some call him the most important man in AI, guy behind ChatGPT. He's invested in this company that makes fission reactors. A lot of smart people invested in this sector. But retail is starting to jump on board, especially this week. We can see these big volume. And this nuclear fuel technology company today, Lightbridge, ripping up 57%. And other nuclear fuel stocks like Centrus Energy also having a monster week on volume. And it's actually my positions in uranium, AI, gold, and China that has helped my new investing account that I started in June for my stock picks portfolio. Rip up to all-time highs today on another great week. It's already up 12.8% in a simple return, even though I didn't invest this amount all at once, a dollar cost average every week. Buying $500 of a new stock every Monday, and anytime I sell, I reinvest all proceeds equally back into all positions. Like for example, my first stock pick, Palantir, even though it's up more than 80% since I first bought it. Because I dollar cost average every month, my average cost goes up a little bit, and that's why I'm up only 77% on it. Anyway, it's still early days. My goal is to turn this new account into $1 million in under 10 years. And so if you want to follow and learn from somebody who actually trades and keeps a transparent track record instead of a fake guru, then click the link below this video to learn more. And so just getting back to earning, we have been doing pretty well so far. However, we're just getting into the thick of it now. A quarter of the way through it. Got Procter & Gamble come out today with a small beat, as did American Express. A few other misses there. Friday's always a slow day for earning. We pretty much get no reports ever after Friday close. And there's a look at the earnings calendar for next week. A few ones we'll be looking at: GE Aerospace, TXN, Coca-Cola, the biggest one of the week, Tesla, a few other financials, and other large blue chip stocks as well. Latest expectations from the street is S&P is expected to report earnings growth of 9% for this calendar year, and revenue growth of 5%. So businesses are becoming more efficient, increasing their profits more than their revenue, and that's expected to accelerate next year. Revenue growth 5.9%, earnings growth 15.1%. And the good news is it's expected to broaden out from the mega cap tech into the rest of the market. It's supposed to close that big gap, especially what we saw last year. Mega cap tech was head and shoulders above the rest of the market. Had a lot of people convinced we were going to get the recession this year. Everything was going to come cratering down. However, I guess those forecasts have been pushed out to next year once again. And now for the first time ever, we've got 9 stocks in the $1 trillion club. Berkshire Hathaway down the bottom, and after yesterday's rip up on earnings, Taiwan Semi now in the $1 trillion club, along with the rest of mega cap tech. I wouldn't be surprised to see Tesla back in here coming months as well. In fact, Bank of America is calling Nvidia stock a generational opportunity. They think it can hit $190 a share, currently around $140. They think investors don't give the company enough credit for its ability to grow free cash flow at 45 to 50% margins, roughly 23 to 25% above the Mag 7. They see the potential for Nvidia to log more than $200 billion of free cash flow in the next 2 years. And I agree. They absolutely dominate the market for high-end AI chips. They pretty much slap whatever price they want on them and they will all sell out. And I don't see that changing anytime soon. And what makes it different compared to the past is the secular trend for the adoption of new technologies is accelerating over time. You look at how long it took for society to adopt railroads, steel, cement, telephones, motor vehicles, televisions, VCRs, mobile phones. Everything is getting quicker and quicker. And I think AI, which is not on this chart, would possibly be even more vertical than the adoption of cryptocurrency. But like I said, that's just the leading theme of this bull market. It is an AI boom. However, it's not just AI stocks and the huge capex. We've now got global central banks really supportive, lowering interest rates, some even doing quantitative easing. Could be on the mother of all stimulus from China. They appear to be rolling it out bit by bit, and monetary conditions and liquidity continue to loosen. Manufacturing, especially with a huge reshoring in America, that could start to go back into expansion territory as well, just like services has been for a few years now. And we're getting more signs, but we could still be in the earlier part of the business economic cycle. Seeing a real drying up of IPOs, along with mergers and acquisitions. However, that's starting to tick higher this year compared to last in the amount of announced deals. Same with private equity coming back into the market as well, ticking up over the last few quarters in their buyouts of technology, media, and telecommunications companies. Again, another potential sign could still be coming out of the bottom of the cycle in an early going into mid-cycle. Typically late cycle, you see all these things peak out, along with inflation, rates climbing, and things get kind of too heated. Growth will roll over, and defensive sectors start leading. However, we've pretty much seen the opposite of all that. And good news is we've got a huge tailwind in share buybacks at all-time highs. Companies with so much cash just depleting the supply of shares out there. And especially at a time when IPOs are still well off highs, there's just less and less shares on the market, with money constantly coming in every day to buy them. And just looking at Goldman Sachs forecasts of cash use and what they expect next year, pretty good bump up, over 10% overall. They expect CapEx go up to 1.1 trillion, share buybacks above $1 trillion, and increases in every other category: dividends, research and development, cash acquisition. Total cash use expected to be up 11%, and that is a huge structural tailwind for the stock market. We're also seeing a bump up with CEO confidence. They like what they see just around the corner. Their expectations of global growth is coming back, and we're hearing that more and more across earnings calls. However, don't worry if you've sold too early. Like I said, it happens to the best of us. Investing's kind of like golf. You always aim for perfection, but you'll never get there. That's what makes it so challenging and interesting. We all kick ourselves. We all miss opportunities. We all sell too early. Even the best in the business, Warren Buffett, may have left $23 billion on the table by trimming Apple stock early this year. And there's Apple, which closed at an all-time high today, even though it didn't quite break out to an all-time high. And a lot of people say Warren Buffett's record cash pile, even though they're only looking at it in absolute term, not as a percentage of market cap, which is not at a record. I think he could be loading up his elephant gun to make one big acquisition before he retires. And I'm talking $100 billion plus acquisition. Maybe his signature acquisition of his career, which could completely flip that narrative that all the bears are constantly reminding us. Warren Buffett has $280 billion in cash. Maybe he puts a lot of that to work sometime soon. And a big part why inflation could come back next year. I think it's more likely inflation comes back than we get a recession. I think the risks are to the upside instead of the downside, and which a lot of commodity stocks could continue doing well, is because China is opening the window on their financial markets, and they are rolling out measures day by day, and we still may not even seen the big one. Heard comments from Xi Jinping, People's Bank of China, says he wants to keep the focus on technology and science to continue modernizing China. We've seen banks over there lower their rates, lower mortgages, loosen up conditions required to get into the property market. We just got their Q3 GDP, came in a touch better than expected, 4.6% year over year. September retail sales, 3.2% year over year. That was better than expectations, along with industrial growth. So some signs of some early green shoots, even though they're just rolling out their stimulus measures. I think it's already changing sentiment on the ground, along with global investors. And we're getting reports from those on the ground that they are starting to live up to their words, unleashing liquidity into the system. Interesting to note in China, when stocks go up, they're highlighted in red. When they go down, highlighted in green, as red is their color of prosperity. And one of my favorite Chinese analysts said he was dead serious when he said Beijing now seems to be seriously considering the stock market behavior in its policy announcement. The stock market went into correction mode, and we have a slew of new policies, including a lending facility for share buybacks, along with another round of cuts to their rates to boost liquidity. Investors are coming back into the market, and confidence is building in a way that wasn't there in at least the last 2 years. This is a guy who really understands Chinese markets well, and so I always pay attention to what he's saying, amongst others. Got a little bit of a bump up there today in FXI, just above its 50-day. But like I've been saying, similar to that analyst over on X, Chinese authorities will buy the dip themselves. They're determined to get underneath their markets. And so if it were to come back down here, they're going to ramp things back up in a big way, get confidence back into their capital markets. They're just not going to let it go down the toilet, in my opinion. But what I've noticed online is the more trolls you get, the more hate mail you get, the more doubters, the more skepticism. I think that's kind of a bullish signal, contrarian signal. And it's not just me that's noticed it. Also, billionaire bond investor Bill Gross came out with a post today. Lots of second guessing, doubting, trolling when I recommended regional bank stocks almost a year ago. Not a bad return, plus dividend. And I do remember him recommending that. In fact, I featured it on this channel. But after that fiasco we had in regional bank stocks in March last year, once again, a lot of people gave up on them, were convinced the worst was just around the corner, as there was a really strong consensus that we're just about to go into a recession. However, Bill Gross is right. They're up about 50% since then, plus dividends. And they too this week broke out to fresh 52-week highs. But what really ripped today was silver. It's been consolidating for a few weeks, just below highs. Seems to have let go, have uncoiled on the upside. We heard news recently of Russia going to add silver to their reserves, the first big central bank to do so. We've got the BRICS alliance hinting at a new payment system, potentially backed by gold. Silver has the potential to climb up right there with it as a way for all these BRICS to preserve their wealth outside the US dollar. And we've still got geopolitical tensions on the rise, still waiting for that response from Israel towards Iran. After they just deleted the latest Hamas leader, that doesn't look to be going away anytime soon. Gold's going to have that inbuilt geopolitical risk premium for some time yet, I would say. And just such a strong move today, like I've been showing you across many assets. Look at silver miner, ETF, ripping up there today on really strong volume. And I've got an award post of the day to Michael Maloney. Gold's normally quoted as $2,700 an ounce. However, he put it eloquently today when he said the US dollar falls to less than 1/2700th ounce of gold. Used to be 1/20th. It's a different way to look at it, isn't it? But just like Bitcoin, gold can correlate with global liquidity. The more money central banks print, the more fiat currency there is, the more supply there is, the more valuable finite resources become when priced in that infinite fiat currency. You can see that here, the price of gold in the black bars, global money supply in the orange. And again, that's increasing year over year. And the good news for global economy, if it can start growing again, is oil's low. Even with everything going on in the Middle East, can't seem to shake it higher. Of course, there's still the upside risk, but it seems to have traded really heavy this week, back down to under $70 a barrel. See if this big accumulation candle can hold up. But the fact is, US is producing it like it never has before. Big part of that is fracking. Allowed the Americans to compete on cost per barrel produced versus all the other low-cost labor countries out there that do it. And this could further accelerate to the upside with a change of government as well. That and AI could also help to keep the price of oil at a new lower median, which is great for economic growth. However, I don't mind keeping a little bit of upside exposure to oil like I currently do on my stock picks portfolio. Makes for a great hedge just in case we do get that spike. If we do, that'll hurt a lot of other stocks out there in the market. And what could also be helping Bitcoin moving higher? So we're getting news that the BRICS plan to use digital currencies for investments. With Brazil, Russia, India, China, South Africa, United Arab Emirates, and the Saudis likely to invest in Bitcoin. That's crazy if true, especially if we get in a pro-crypto government in the States who have already speculated about potentially adding Bitcoin to their reserves. It's a really interesting time. If we see a big global pylon by governments into Bitcoin, there's no telling how high it could go. Could see $1 million a coin in the next couple of years. And there's a look at the latest odds in this current race. Still 60-40. Looks to be a lock at this stage. Someone's been betting big on a red win. We've got a mystery $30 million wave of bets moving the market. And I noticed that over the last week or two. Seems to be a real shift in sentiment and market pricing. Not just in the election prediction markets, but also in financial market. Really heavily pricing in a red win. And it seems the more interviews the blue leader does, the lower her odds go. And it kind of just reminds me of exactly this time 8 years ago. I dug up this chart for you guys. I'm sure a lot of my American friends remember this. This was the consensus going into the 2016 election. How wrong did they get it? However, like I always say, money doesn't lie. If you want to know what's more likely to happen, follow the money, the markets. Just like the odds that I showed you. The polls like this one here are heavily manipulated and pretty much have the same worth as garbage on the street. And just diving back into the charts. Classic VIX crush Friday down to an 18 handle. And with that, option dealers starting to calm down a bit. Volatility risk premium, 7.4 points. Starting to dial it in here a bit. Along with oil volatility coming down, but still elevated. Crude still on edge there. 2-year yield really consolidated this week, just below 4%. Even though the 10-year still holding up a bit better. Market really starting to change its tune ever since Jay Powell cut 50 basis points. There's the dollar, still technically overbought here at 103.3. No real clear candles of a short-term top yet. We do have some bit of bearish seasonality. You can see in my indicator there. Still got global equity indices trading at all-time highs. Germany's DAX, and I'm just watching the chart of the spread of consumer discretionary versus consumer staple stocks have been consolidating pretty much all year there. But if I just go out to a monthly chart, that consolidation may just resolve itself higher and this growth rotation continue to accelerate. And if we do get a broadening of earnings growth, along with a focus of reshoring in America, incentivizing American production, that could give us a really good bounce next year and beyond in the spread of small caps versus large caps, which has pretty much been in a bear market for over 3 years now. But like I said, I think the risks are to the upside. More likely we could see a resurgence of inflation next year than a recession. The market's starting to think that as well ever since Jay Powell cut. And there's a look at the robotics and AI ETF, also consolidating pretty much all year, and its weekly chart as well. Looking a little constructive there, consolidating, keep pushing up against this roof that may just break through, continue to march. But we'll be paying attention to Tesla next week. I expect them to beat on earnings, hopefully give us some good guidance as well. Otherwise, like I said, I'll be right there buying the dip. And I know that upsets a lot of bears out there. Just relax, guys. It's the weekend. Like I said, I'm just having a bit of fun. But as most of my viewers and clients know, there's more money to be made on the upside than the downside. Stock can only go down 100%, but a good stock, especially one like Tesla, it's up 17,000% since IPO. And I still think its best days lie in front of it. And with all that being said, I still wouldn't be surprised, like I've been saying, if we get that 2-3% red candle before the election. But I think that'll be a massive shakeout. Everyone will jump on board and say, look, I told you so. The market's crashing. It's down 3%. Sell, sell, sell. I think the market will quickly buy the dip. And just like the election we had back in 2016, may shake out a lot of people and then we just rip higher. Either way, exciting times in the market. Gold, silver, Bitcoin, uranium, like I've been showing you guys, big volume coming into these hot markets this year, and that's helping all my portfolios trade up to all-time highs, and I hope yours are as well. Have a great weekend, and I look forward to seeing you again come Monday night. Cheers.